Hello, it's Brian Shannon from AlphaTrends.net. Today is January 20th, Monday. The market sold off pretty hard here today. The S&P 500 will start out with. This market lost 5.28% today, lost $4.49. And we can see here we're below the declining 10, 20, and 50-day moving averages. And it just seems inevitable that we're going to go probably test these lows now. On yesterday's video, that is Sunday, in the extra video I done, I said this market gave us the most reason for concern because of the inability for it to get back above this prior level of support near 86 and that declining 5-day moving average. So we did see a break early on of the lows that we saw from last Friday, and then it basically just continued to sell off right into the close as people are just apparently throwing their stocks away at this point. That $83 level obviously failed to hold, and at that point, you know, like I said yesterday, if we fail to hold the $83 level, then we could see a continued breakdown, and clearly the market's being led lower by the financials. To just continue to be the bottomless pit here. Financials were down 16.5% today alone, and easily undercut the November low, intraday low, and obviously we've got a new closing low as well. The weekly time frame here, you know, we had broken support on this area. We're down at new lows, and it actually, you know, this is what the rest of the markets kind of look similar here on the weekly time frame, except maybe about 3 or 4 days behind. So the S&P/Y obviously remains guilty till proven innocent, like all of these markets. And financials, again, are the worst of the group. They had gapped down and basically have been weak all day long in here. Tried to recapture VWAP, but you know, when you've got such a strong decline, it just doesn't make any sense to go in there and try and buy into a market like this. Let's take a look now at oil. Oil was down. The USO was down $1.20. Looks like it's headed for a test of these lows and perhaps lower. So we never got any strength above that 5-day moving average. That continues to decline. It will remain guilty till proven innocent, like all of these markets, as long as we still have that declining 5-day moving average here on the intermediate term. That's what tells us to stay away from the long side. And from the longer term, you know, from an investment standpoint, look at that 200-day moving average, still declining very rapidly. It's going to take a lot of time to heal this market before we can think that it's appropriate for investors once again. Just because markets look cheap doesn't mean that there's any reason to be a buyer in here. Semiconductors, they also broke down near those moving averages. This group was starting to look like maybe it could turn bullish in here. And what I was looking for on Friday was maybe it would make a higher low near that 5-day moving average and turn higher. But if it had taken out this level, then the market was back basically and controlled by the sellers, and that's exactly what we have here. Looking at the weekly time frame, you know, again, all these markets look very similar. That we have these larger little bearish flags, and it tells us that there's still sellers out there that will see bounces, of course, all the way down. And if you're having a hard time believing what you're seeing, don't fight the trends, but just sit in the sidelines, and cash is a much better position than trying to fight the downward momentum that we're seeing in all of these markets. Russell 2000 lost 6.7% today. Obviously, you know, this market, we've still got the declining 5-day moving average. We broke down, gapped lower, that is, from the open, then undertook that 45 level. The 45 level was basically our last little level of hope that maybe this market could turn higher and push back up above some of these levels of resistance. But it just continues to be a stair step lower. We get these, typical of a bear market. We get these these very fast rallies that fail quickly. And we'd seen that the market had gotten back above 46. That failed, like I said, on the gap earlier this morning. And the next level that of potential support for it was 44. Well, we've broken that 44 level and closed right on the lows here today. So you've got to look at all these markets and just be very, there's nothing bullish obviously here. We had a nice little bounce. That bounce lasted about 6 weeks, and obviously the sellers are back in full force here. We've got that same little bearish flag in here. Perhaps we're heading down towards 40, 41. There's no way to call a bottom. No one can do it. We will only know well after the fact. But when the momentum is lower, what you want to do is either be short or on the sidelines in cash. Let's finally look at the NASDAQ. The NASDAQ, I'd said that maybe we could get a push past this resistance if we pulled back and then made a rally attempt. Obviously, that scenario went out the window very quickly as it undercut this level here of prior support at $28.60. I said below that 28.60 level, we want to look then at 28. Well, on the 30-minute, or let's go take a look at the 120-minute time frame. We can see that this is that 28.50 level that seemed to have trapped the shorts. Only for, I guess, a couple hours in there, because now the sellers are clearly back in control. You look at the daily time frame, and same thing that we're seeing in all of these markets. It's looking pretty darn ugly, and it's scary to think that the lows are actually down near 25, and here we are up at 28. So there's still potentially a lot more pain to come in all of these markets. I will have another video later on today with a look at those ideas that I had mentioned on Sunday. So look for that later on.